Well, thanks, John, and some good questions for you to think about. Over at Deloitte, we've been on this journey for a number of years. We've done a lot of research discussions with users of financial statements, regulators, and whatnot, and have come out with a series called "Is More Less?" And we believe so, and part of the theme we want to get across is around simplification, using the MDNA non-GAAP measures to get the appropriate story across to your users. Now, John, I was thinking about, your case, you do really start with a fresh, clean piece of paper, right?
We do.
And so, yes, you need to comply, but you're able to think about, telling your story, link it to your strategy through your MDNA, so do those things. My question for the other panelists is, for others that have been around a while, they've been complying, no comments from the regulators, and it's a lot of work to make change. What's going to be the impetus and belief that this is important to really make a change, and what can audit committees do? Maybe I'll start with you, Eileen, on that.
Yeah, I think it's very hard, especially in regulated industries where you will get questions of disclosure from your regulators, and again, it's always a more issue. It's rarely a less issue. I think the other thing is if you're an SEC registrant, for instance, and you submit your documents, there is just never a period where you don't get comments back, and it's always about more disclosure. So yes, I think the materiality issue is very important. You have to decide what is material, but it's going to be it's going to be a long road to reducing the overall size of disclosure without ending up with regulatory heartburn.
David, your thoughts on what it's going to take to shift and actually improve the quality? By the way, the report it's broken. So the question is, how does it get fixed?
Well, I think the report actually serves a very good purpose, and I think, as John was mentioning earlier, if you can focus on the future as well as the past to give investors a sense of where you are going strategically. Again, the value of the company is the present value of the cash flows, so if it's future-oriented, that really gives investors a better sense of where the company is going and can evaluate it that way. I mean, if you're a public company, you'll typically have a conference call in advance of the annual report and the MDA coming out. So the value to investors of that MDNA is probably less important if it's looking at the numbers per se, as opposed to the future orientation. So I think there has to be a bit of a rethink on what is valuable. I mean, some of these annual reports are 800 pages from some of the banks. And when we look at them, our analysts will look at 10% of that. So what's the other 700 pages doing there? I mean, it certainly isn't satisfying the investors, and it obviously is creating a lot of work for the company.
So one of the themes, I started how overburdened audit committees are, but now I do think this is important for audit committees to think about how they can change, and I think they need to demonstrate some leadership there. Maybe some thoughts on, if you were to start somewhere, MDNA, what would you suggest that in the near term that audit committees and management could do on that front? John, any thoughts on?
Well, I think as I said, that there's a lot of pressure, as we've already talked about, to bog you down and cause you to stick with, I guess, what I call plain vanilla disclosure. You really don't want to add more on, but I do think part of our thinking it has forced us to look at why are we reporting in the first place, and David, as you say, there is a tendency to drag you back into the short term, when really I think investors want to know more about the long term. So I think it's picking your spots where you get your story out and have it be consistent with your vision. I think, as I shared with the group earlier, I asked our CFO about our vision for corporate reporting, and he said, well, we do have them. We want to be held out as a company that understands its business very well and communicates it very effectively, so that our investors our readers can have the confidence we know what's significant to us, and we know where we're going. And I think if our audit committee has that sort of mindset as it thinks about how we tell our story, I think it will go a long way to not dismissing what we're trying to achieve, but actually saying, let's work within the framework we have to get our story there. And so that's what we're trying to do at Economical.
I think, yeah, Don, I think one of the things is a lot of, we'll say it's management to start with, because obviously management writes the MDNA. But the tendency, I think, as statements have become more and more difficult to interpret, that a lot of companies have fallen back on using the MDNA to actually explain the statements. And I think we've got to get away from that. You know, we've got to say, okay, the statements are the statements. They have to, by and large, explain themselves. And of course, we do have to work with standard setters and audit firms and everybody to try and see if we can't come to some agreement as to how we might better do that instead of having 19-page pension fund notes in the statements. So, you know, there's a lot of people who can relate to that. But I think that the MDNA, as John says, needs to be a document, a combined management and board document that talks about the essence of the company and you know, the future of the company as based on where they are today, you know, given that, where are we going kind of thing, rather than spending our time explaining the financial statements.
Well, I think some very good tips, both in terms of a vision of the CFO and the audit committee and where they aspire to and approach around this. Clearly a lot of work to do, and I would say it is a journey that you need to embrace and move along. Just a couple quick comments. I mean, there is a proliferation of non-GAAP measures for people to tell their story. I often wonders how much time and attention is given to those non-GAAP measures to make sure that, you know, there's some good rigor and they're not changed left, right, and center. But, you know, David, from an investor perspective, what would be the view of, you know, these non-GAAP measures?
Well, our concern is there's a proliferation of them, Don. I mean, they're everywhere. And our concern is that it's sort of like managing earnings. We've got to be very careful that management doesn't pick and choose what they want to include in those non-GAAP earnings, because I can assure you they're probably going to make the company look better in terms of what they choose versus not. So, again, we want to be really careful. I think the key here is for the audit committee and the board who oversee management to make sure that there's some reconciliation of these numbers back to the financial statements, so that the financial statements are audited. So we got to figure out the non-GAAP measures. Are they something which the audit committee and the board can stand against with respect to presenting these out to the investment community, which the investment community then relies upon?
Yeah, I think that's a good point. And the point I guess I'm trying to push on is our audit committee is really spending the time to look at those non-GAAP. Now, you shared with me a good practice.
Yeah, we definitely, and then John mentioned it himself, said that, you know, you have to know what's in those numbers. And I have the practice of using the internal auditor to send me a note every quarter that the non-GAAP measures have not changed from either in philosophy or in disclosure from the last time we looked at them. And I think it's important that you have an independent point of view, and I think it's you know, it's just one other helpful thing that the internal audit can do.
Well, by the way, Cameron, yeah.
Well, just the one thought on non-GAAP, I could talk about that for a long time, but talking about these measures and the proliferation of them, the one message I would say is, can you explain why you're using that measure to investors and how management uses that measure? And that's one of our expectations as a regulator. There's a bunch of expectations we have, but that is a key one that companies often fail at. If you can't explain what that measure is used for and how you use it as an audit committee member or management, then why is it there?
So you're right. The topic of both corporate reporting improving and non-GAAP measures is a huge one, and we're just barely touching the surface on that. And I might add, it's one thing for the non-GAAP measures in the MDNA. When I flip across to the CDNA, which talks about compensation, there's further adjustments. These are non-GAAP measures. So I think focusing on that, we won't get into that now, but I think it is something to be thinking about.